So I would now like to invite our panel members on screen. Steve Young, Philip Nothard, who you have seen before, and then certainly two of the last 2 years Car Remarketing Award winners, Cars to Click and Auto One Group. Quite faces that you have seen before, but I think, of course, we're adding here the sourcing aspect, and I think they both have services and certainly a view on sourcing. So welcome Jost, welcome Brian, welcome again Philip and Steve. All well?
Yes, we are. Thank you.
Good. So maybe to start with a question towards Brian and Jost. How do you see the future of used car supply? You have heard some of the comments. You're, of course, making your a business of it as well. So I hope you can share how you see it. Maybe to start with Jost.
Yes, hello everyone.
Hi.
How do I see the supply? I think it's a very interesting question, and in comparison to our colleague from Microsoft, I don't have a glass ball, but and I think also Philip already mentioned some interesting views on the new car production, and I am a bit skeptical that OEMs will really keep down the volumes. And this in the end will also directly impact used car supply. And I think over the next months, it will still be, of course, very clear. We will still see a shortage. But what will be next year, what will be in 2 years, what will be in 3 years, I don't know. The only thing that I know is that everyone in the industry needs to stay flexible, needs to adjust to the developments. And I think that the changes or the directions that we're seeing, they are changing rather quickly. And it will be very, very exciting.
But basically, you are still increasing your volumes. That you basically buy a B2B, that you sell B2B. So you must have found a way to still source. So
And I think that's exactly what I mean by being flexible.
yeah, okay.
So we have increased our volume also this Q1 compared to last year significantly. And how do we achieve this? Mainly by adapting to the price levels. So if we see we can buy or we can sell for higher prices, and we can also buy for higher prices. I think this is one key part. And second part is diversifying the sourcing channels.
Mm-hmm.
So we are sourcing a lot from consumers, but more and more we are also sourcing from dealers. In between, we also started to source a lot from leasing companies or rental companies, and now everyone knows it. These sourcing channels are drying up. So it's a volume that is stagnating, and then you need to find additional ones. So maybe there's more dealers that can sell cars to you, and maybe there are more customers that can sell cars to you. So we are always shifting and seeing where can we get the next set of interesting cars.
Okay. Probably Cars to Click certainly also has a view on the different price levels. We saw at the start Mark explained that dealer demo channels, so short cycle channels, has not really gone down dramatically. So do you see, let's say, still certain segments or markets where it's still very interesting to buy? Brian, sorry.
Yeah. So what we do is that we are using what we call geo pricing. So we're looking at Europe as a whole market, but then we look at the individual countries to see if there's specific signals in those markets for vehicles that are slow moving in one market and then fast moving in another market. And this is something that is driving our business. And like Jost is saying, we also increased a lot this year again. And the flexibility that Jost also mentioned is also part of what we do now. We are pre-allocating vehicles running fleet as they are in running fleet. So before they are returned, we are already allocating those using our geo-pricing. In some cases, we are even allocating the vehicles at the time they're being bought by fleet owners or rental companies. So there's a lot of new opportunities. This is a very difficult market right now. You really need to find new ways and think different and be creative in the way you plan yourself. The good thing is that everybody talks about the price. There's too few cars in the market, and it's very easy to sell everything. It's true, but it's not true, right? Because you can have vehicles in one market where, even though the market is screaming for more vehicles, those vehicles stand still in that country. So that's what we have found as our model, that using geo pricing and our AI and our data to tell us where to source the cars, in which countries where they are difficult to sell, and then put them into the markets where we have a higher demand, therefore higher price. So it's for us, this has been very rewarding and also challenging the last period here.
Okay, good. Just maybe coming to a question that maybe is in first instance a bit more for Philip and Steve. The question from Johan before that says there was the fact that new car sales needs an omni-channel approach. For used cars, probably that's a bit the same. How are we in this evolution of omni-channel? And he was talking, Johan Arts, about just digital and showroom, but I think there are also elements that lie between both. I think, yeah. Philip, maybe.
Yeah, I think you're right. I think it's not one or the other, and I think I said it in the presentation there, that you've got entrances that are coming in from a purely digital proposition into the used vehicle space, and you've got those that are responding and have responded very quickly in terms of becoming more digital and an omni-channel proposition with their used car proposition into that consumer market. I think then you've got this mix in the middle, and I think what we've got to remain key is at the middle of everything there is an asset, there is a lump of metal, there's a vehicle that needs storing, needs maintaining, needs imaging, etc., needs moving around, and that is key with Elephant. Everything that we move forward with this, I think the consumers, yes, I think the drive towards that omni will be quicker for new vehicles because it's being led by the manufacturer. It'll be secondary led by the agency model. It'll be led by those new entrance manufacturers that are coming into the space that with just a purely online omni-channel proposition, but it'll very quickly start to come across the market and therefore into the used vehicle space. And consumers will get used to that end-to-end purchasing of a used vehicle as they do a new vehicle today. The key with all of this, and we've got to be careful that a lot of people talk about this omni-channel, the e-commerce, this online, but there is always an element of interaction all the way through. The actual 100% where a consumer purely interacts in the digital space with no interaction with the retailer is very slim, very small percentages. There is some kind of interaction. They may inquire initially online. They may never go down to visit a physical dealership or a collection point. They may get a home delivery, but all the way through there is some kind of interaction, be it by email, be it by other channels. So I think we've got to be clear with that as we move forward, that there'll still be an element of interaction required.
Steve, sorry.
Go on.
No, yeah, Steve, in those in the discussions you have with your members, sometimes I feel that talking to NSEs, importers, OEMs, they hold on to, but online sales is only 5%, 10%, almost as a kind of, and now I'm gonna put it black and white, almost as an excuse to stay with the current what they have. Do you feel a bit the same, or?
No, I don't actually. I'd say almost the opposite, that they have unrealistically high ambitions as to what they're going to get online. You see different manufacturers talk about, we're going to do 25% or 50%, online by a certain date. I don't think, if you define that as end-to-end online, they don't stand the slightest chance of achieving that. Our consumer research says that the used car buyer strongly favors omni-channel. In other words, they want to do a bit online and they want to do a bit physically. They don't necessarily want to do the same bits online physically one to another, or even the same customer, the same buyer who might be buying a sports car for the weekend, but at the same time he might be buying a little first car for their university age child, and they might have quite different buying journeys for both those cars. So the customer demand, their ideal preference is still very strongly omni-channel. You've got to offer both. There might be 5%, 6%, and it will probably grow, who are prepared to buy a used car online if you back that up with a sort of 7-day, 14-day sort of warranty. And for those very few players who are purely online with no physical platform at all, then there's a big enough market, given that they're pitching their offer nationally. Then there's a big enough market for them to make sort of decent business. But if you look at someone like Cazoo, almost the first thing they did once they'd raised a huge amount of money for a pure online play was they went out and bought a used car supermarket chain. So they became omni-channel within weeks of raising the money. So omni-channel is where it is if you want to have broad market appeal. It doesn't stop an individual trader doing good business purely physically, just with listings on the platforms, and it doesn't stop someone doing a few tens of thousands of cars even in a pure online play. But if you're talking about the majority of the market, it has to be omni-channel.
Yeah, of course that we can get some additional insight on this, Jost, from your side with Autohero. What are the latest experiences there? Do you see a change? Do you see an uptake of people? Do they have a certain idea profile, or what's the experience currently?
So I think I would agree to Steve here, because what we know, and I think which is also quite public, if you are comparing different segments of e-commerce, used car is still a segment where they say there's maybe 1 or 2% is online. And when you come into, I don't know, books or electronics, I think there are categories that are 50% online already. So this is still a market that has to develop and that is developing. And I think that Steve also mentioned some very good points here. It's about trust. It's about return guarantees in case of the car does not meet the expectations. But on the other hand, a car purchase is often something that the buyers are thinking about quite a while, and they are researching online. They're deciding for a model, and once they decide for a model, there are just customers that want to have the easiest way to buy a car, and that is, in my eyes, definitely online, because every offline transaction, it is to some extent, it will add, it will make it more complicated. So you might need to drive to a dealership. If you're unlucky and you're looking for a special used car, you might need to drive, 200 kilometers to the next city, and you could have the same. You could also then, you're not sure that the quality is 100% as described on the classified. The only difference is that you can look at the car directly offline at the dealership, but you then also invested time plus 200 kilometers driving, whereas online you just get the car delivered at your doorstep, and in the end it's the job of companies like ours with Autohero to make the experience exactly like it's described online. And if you match that, I think it's the future.
There were quite some questions on I think EVs. I think regardless what we do as expert tracks forums, there will always be questions coming on EVs because, of course, that's a very big change for the whole remarketing industry in the future. So I think if you all can share a bit of the views there, maybe the first question to Brian is, do you see more, how do I call it, price differences, opportunities to call it in this way, of EVs versus ICE? Is there more price discrepancy in this?
I don't think you can say anything about the type of fuel or in categorize it like this, but we see a lot of on EVs and plug-in hybrids. We see a lot of opportunities because in some countries that the demand is simply so high and the supply is so low that the prices are in many cases for a young used car higher than a new car. We have some examples in Denmark where we are selling B2B at retail price, as a retail value for a new car with a 6 to 12 months old car, and that car is then handed over to a private consumer for a higher price than a new car just because of shortage of delivery. So of course, but this is some atypical things that we are seeing right now. There's one thing that I would like to add to this is that since we do a lot of pre-selling, and we talk about we pre-sell and pre-allocate the cars before they're returned, we have customers right now, so car dealers in some countries where they have bought cars that they will get in September, and these cars are already have a private customer waiting already now. And this is something that we see now that this is changed, because this was normal on new cars that you had to wait 6 or 12 months or whatever on a new car. But right now we have a lot of our buyers, because we only do B2B, right? We have a lot of car dealers. I don't know the number, but we're talking about more than 500 or 600 cars that are already now sold with a private customer contract waiting for delivery. And I think that's really a new thing.
Maybe I can add one point on this side, because we're also doing a lot of cross-border trades, and we see actually that there is more cross-border activities on EVs. And my, let's say, easy explanation is very clearly the different type of subsidies that you have per market. So there are some markets, for example, Germany, where new cars are highly subsidized, but there are also other markets where also used cars in some way, because of lower road tax, no parking fees, etc., are even also subsidized. So in Germany, it's almost, kind of like a must to buy it new, because the bonus that you're getting is just so high. But in other, like Denmark, you don't have those high bonuses, so we see a lot of exports in those directions.
Yeah, I even saw some advertising in Germany where dealers advertise the fact that they will buy the car back at the same that they will sell them, only this 6,000 euros support.
Yeah, they were.
So they're creating a different type of business, and a lot of those cars are exported afterwards. So that's a complete new.
Yeah, there were also a lot of stories in the newspaper where they actually called it kind of like subsidy fraud, because I think the rule in Germany is you need to keep the car for 6 months.
Yeah.
And then you buy the car, and it was basically, you can find guides on the internet how to drive a Tesla 6 months for free. And you basically buy it with the German government tax reduction with the subsidies, and then you export it to one of the markets where you don't have it. And let's say the residual value that you're losing in this 6 months is basically the subsidy that you're getting.
Yeah. Which is probably not the original idea of the
of course
subsidy.
Not, of course not. German taxpayers, they were not very happy about that.
No, I can imagine. Going back over the channel to UK, do you think, Philip, that the used car supply outlook in UK looks different than the rest, basically, of Europe, or do you have additional challenges?
Yeah, and I think because obviously, I mean, the UK have the challenges that we haven't got that cross-border opportunity.
Yeah.
You know, we rely on purely import-export, and you know, the used vehicles from the UK is very much more of an export than it is an import marketplace. So I think, you know, we have got other challenges. I think to the two guys with Josh and Brian there, you know, our forecasts, we're forecasting about a 7.5 million used vehicle transaction market. Now, many would look at that and see that as a fairly positive transactional marketplace. But what is changing is the dynamics of consumers selling direct into car buying businesses across the sector, or you've got rental operators that are buying vehicles out of the market and putting them into their rental, short, medium rental market, that are creating these nuances within the data transactions of a used vehicle place that we've probably never seen before. But I think, just on the point of EVs, interestingly, we've seen a drop this month on the overall market going into April, into May. But actually, EVs has outperformed the petrol and diesel sector and alternative fuel hybrid sectors. Now, part of that is lead times. And again, we talk about EVs, and there's a lot of instability with EVs, particularly around the residual value. Now, that can be a risk, but it could also be an opportunity because you've not got these fixed values that you're performing against. You can have a little bit more flexibility because the EV sector as a general sector is changing. As we get new entrances, we get, first times coming back into the market in volume. So the EV market is changing very quickly. And I think we haven't got that stability of residual forecasting set yet because of the volumes and the type of vehicles that are changing that sector dramatically in this short period of time.
Yeah. Steve, we were talking a lot about new entrants as well. I think it has come up in almost every for every speaker. How, as you also said, that OEMs are even more afraid of handling this part of the business, remarketing used cars. How will new entrants handle this? Because of course they go often purely online. So how do they handle their used cars of the consumers?
Well, they're clearly not quite at that stage yet. I mean, I think that we don't, we're very, very early stages in Europe, and so we don't have data for Europe. But if you look at NIO in China, I think they've sold something like 170,000 cars or something since they started in 2019, 150, 170, something like that. They set up a CPO program last year, so 2 years after launch, so quite reasonable. And I think the numbers that I got in some recent research, they had 170 cars listed and sold 140 of them. So the volumes are tiny. So it's not a huge challenge for them at this stage. I think if you look at Tesla when they came into Europe, then in the early years, it was quite difficult to find a Tesla that was for sale through independent channels because initially Tesla had used quite artificial RVs in their finance schemes and the leasing schemes and so on. And so they had to buy them back in order to protect the overall balance sheet. They would have ended up with a massive write-off at one point. Once things stabilized, then they were much less obsessed with that. And so, you can buy Teslas in the independent channel just the same as you can anywhere else. So I think it's a transition issue. They want to make sure that the brand is established, the reputation is there before they end up with the cars coming out and just becoming orphans in the market that no one's heard of a Xpeng or a NIO, and so it's being sold at a discount to an Audi or an ID or whatever it might happen to be. But the volumes are very small to start off with, so I don't think it's an issue for them to do it. They're partnering with established importers in a number of cases, even though they're operating agency. So they've got some local expertise already on board in that way.
And is there maybe a question for all, but are there going to be additional service providers, being like, for example, Polestar selling online, need to do a the rate-in of vehicles or other players. There are voices in the market that say that some other OEMs might go to purely online. That would require a complete different setup. So who's going to take over all of those vehicles? Will there be new services out there, new companies?
I think, yeah, I think the answer to that is, and with these on the panel here, there's, I think generally whether you look at someone like Polestar or other that are operating purely in an online environment, they need support, they need those solutions, that infrastructure to collect, deliver, move those vehicles, appraise, value the part exchanges, distribute those part exchanges. And in many ways, I think, we talk about the starvation of stock through the marketplaces, but actually, as you sort of see these pure online entrances that are focusing purely on new cars, that creates part exchanges and used vehicles that will actually distributed across the remainder of the network. So you'll actually potentially see an opportunity there of vehicles coming in and being returned to these online pure new vehicle operators. They're not initially going to be looking at a used marketplace, as Steve has said there, because they've not got an established used proposition for the sector. And they'll start to look at those third parties that exist in the marketplace as used buyers. So there is opportunities there, and we're already seeing it in places like the US, the demand from those kind of operators, particularly OEMs, where this demand for an appraisal and an underwrite and a purchase, an asset value purchase of that part exchange, so they don't need to get involved with the pure financials, that take it away from that OEM risk and take it to a solution, a third-party solution partner to do that.
I think that it makes sense for them to use third parties to provide the services, but I think that they should be looking to do it, on a white label basis through their own channels. If you buy a Polestar in the UK, they've got, I think now, 3 dealers, established dealer groups on board to operate the physical sites as agents. But the used car trade-in, if the customer has a trade-in, then they're referring them to We Buy Any Car, which is a BCA service, but they're not doing it on a white label basis, and the dealers are not supposed to independently offer a trade-in value. So a Lookers operated Polestar space, for example, the customer would be told, "Oh yeah, go and We Buy Any Car," and so that to me is sort of quite risky on a number of levels. They're not necessarily going to get the best price in normal market circumstances. And there's always a possibility that they end up buying something else as well, because having gone to We Buy Any Car, they also go to 2 or 3 dealer groups who also have similar services, and they might be diverted away from their Polestar. So I think using third-party services makes sense because of scale and expertise, and doing it on an arm's length basis doesn't.
Yeah, and I think I will come to you, Brian, because I think the results of the poll aren't very bad for you, because 85% agree that effective used car sourcing would require support from probably external to be more effective in this, where 50% says fully agree. So, Brian, you will probably be happy to hear that as well.
Oh, but this is one of the reasons why we started, right? So we know this exists. I just want to touch in on the thing about trade-ins from consumers in terms of online sale of new vehicles. I think that we are just standing in front of a huge wave of change in that market. Without mentioning any brands, I don't think it matters if it's a brand that is fully online or partly online or will be more online later. Everybody will need to have an trade-in function online. It's a must. There's no way to get around it, because it's part of the customer journey, that part of the customers, they will have a used car that they want to get rid of, and you don't want to throw them somewhere else. You want to keep them in the customer journey where they are. So I think we will see a tsunami of white label solutions online, which means that it will be branded with the brand, but it will be run by someone else like us. And it will be using two ways, different flows here. One will be completely digital, where the customer will get a price by the AI that will provide a price for a used vehicle. And then there will be a second one where will be a real offer. Like, so we'll have like different steps going into first getting an estimation and then get a real offer and then sell your vehicle. This is just waiting. I mean, there's a lot of things happening right now, and that will change the landscape of how used cars are getting to the dealers. But as an OEM, I think there's a big demand for setting this up in a strategically correct way. I mean, they're taking away the new car sales from the car dealers, turning them into sales agents. That's one. So that revenue will be less, right? Then they will start taking the trade-ins away from the car dealers as well and putting them, because they will take them as well online, because not just because they want to, but they have to. So there will be a sales cascade where the cars will be bought from the private consumer online, and that will just explode. But the cars that are then offered to the sales agents in certain sales cascades, like 1, 2, or 3, before it gets out to the whole gray market. So we will see some strategic partnerships, and there will be some white labeling, and I think this will impact the used car market a lot in the coming years.
Now, you were saying about the AI, and I think Jost won the Remarketing Award last year with an application on this. Cox Automotive also has basically launched some tools there. What's the latest information on how this is applied by our private customers or dealers? Is this now is this efficiently basically used, or what's your evolution on this, or idea?
So what's our evolution on this? I think indeed very interesting question, and I think it's very important for this whole online car trading journey, because what we know is that customers are also obviously looking for some time for a new vehicle, and they will ask multiple times for trade-in values. And if you have to do this all manually, number one, it's quite cumbersome for the customer, because they will have to wait until somebody prices the car. And number two, it will also be quite costly. So today, if we look at our online, let's say, selling services for consumers, and from our point of view, buying services, we are quoting 60% of all prices automatically, fully automatically.
Okay.
And this is really on whoever knows our brands with Dieckhaus and Auto and the similar ones across Europe, we are really in the let's say in the broad market. So we are not just doing 1-year-old or 2-year-old cars, but we're doing everything from, I don't know, a couple of months until probably 15 years. So we have everything there, and we are able to price 60% automatically, and we think that we will be able to improve this further. And obviously, this is also big opportunity to also open this up for third parties and cooperating exactly like how Steve mentioned it with OEMs that are often, or in the most of the cases, interested in their own vehicles. So if I'm a Polestar and I get a Polestar back, which will also happen in 3-4 years, then obviously I want to try to keep this in a network. But what should Polestar do with the old BMW? Mm-hmm. What should and even if you are going for the traditional manufacturers, what should Audi do with the old BMW? It's simply they simply have very, very limited interest, and it's just important for them to do the trade-in, because we know that something like 80% of new car buyers have an existing car, and for most of them it's also a very, very important part of their financing. Without this, without selling the old car, they will never be able to afford a new one.
Yeah. Okay.
We see something that we did some analysis together with some partners of ours last week, and we see something with the pricing, the different pricing models in the market, having some challenges. The pricing models that are in the market that are looking at historical data facing some problems because the prices are not going down like normal. So the depreciation curves that you normally would work with in the old days, like 2 or 3 years ago, those algorithms don't work anymore, because you need to monitor the market, and you need to see how's it going, because as I said, some vehicles are actually going up in price instead of down, right? So we saw that on some vehicles that we analyzed, that the different tools were really different in the way they gave pricing, and the ones that were basing historical data were wrong in terms of what was the right market price right now. So that's one thing. The other thing is that if you're an OEM and you want to trade in cars, you want to make sure that you give the best possible price to your customer, right? And that means that if a customer in Italy wants to trade in a specific vehicle that with low demand in Italy, if you only use the Italian pricing, then you will give them a low trade-in value. They might go away. But if you give pricing and see, oh, that same vehicle could be sold in Denmark for 10,000 euros more, which is example we have of that, right? Then you can actually give them a higher price, even sometimes retail value for those used vehicles, because you're using geo pricing in those solutions. So
I think it's worthwhile just on the trading point to remember that with the growth of agency in particular, but just the growth of manufacturer captive financing in general, then the percentage of buyers, new car buyers, who actually do own their existing car when they come in, will be decreasing. You know, it's going to vary from market to market, but you know, in the UK, then 90% of retail buyers are buying on finance, and the residual risk sits with the manufacturer captive, and so most customers don't have full ownership of the car. They may have some options, but it depends how they bought it. But if you got straightforward personal leasing, it's not their car, and the manufacturers are going to use more and more of that as we go towards agency to try and hide any price support they're putting into the new car deal.
Yeah, and I think to Yossi's point there, that the consumer is wanting simplicity and efficiency. They want a simple appraisal. They want a price. They want an immediate price on their vehicle, and they want it fixed so they can go away and make their decision on their next purchase as simple as possible. And that plays into the new world of agency, where the OEM, they want that consumer get a fixed price on that vehicle. They sell them the new vehicle, and then it goes into this sort of ring-fence marketplace where they can offer it their own network initially, and then it spreads out. So if you look at VAG, they may have a VW coming in. It goes to the VW network of buyers initially, then it goes out to the SEA and Audi businesses before it goes out into the broader marketplace. So we'll start to see a lot of that. But the key with this is they want that fixed, simple, guaranteed valuation on that part exchange that that really is. And back to Brian's point, you can't these days just look at historical wholesale data. You've got to look at the future. You've got to look at both retail and wholesale dynamics, and you've got to look at market dynamics as well geographically to see where those values and that vehicle is best placed. What is the best route to market? What's the best channel to market? And what market is best for that vehicle to go into at what point is key with this.
Well, I think we can keep on talking for another hour, probably. But I think I will be so kind to close this panel. But I think certainly a lot of insights. I think we all agree that it's all changing. There's an enormous change coming, both from an omni-channel and from new players or new services that probably have to be there with agency models, direct sales, and everything. And that, as the poll suggested, 85% agree that there is more need for more professional, even maybe, or more dealers using external services to do appropriate and good sourcing. So thanks a lot, Steve, Philip, Jost, and Brian, for your support, to be here, for your insight, and I'm sure we'll see each other back soon.
Thank you very much.
Thank you. Thanks all. Thanks.
Thank you. Bye-bye.
Okay, ladies and gentlemen, that was a very good panel with two of the Car Remarketing Award winners of the last 2 years. Where in the next few weeks you will surely hear about the Remarketing Award appliance. So you will probably receive information about this in the next weeks so that you can also start applying for the Car Remarketing Award of 2022. I know it says closing and what have we learned today. Now, who am I to try and make a summary of all of this? But clearly, I think general out of the polls and out of comments, people don't believe that the situation will come back as it was before COVID. Car supply, new car supply might be affected for ever because some OEMs will not return to the same level of production as they did. New players start emerging also because there are new services for trade-ins and everything. So the ownership of the used cars that can do B2B will go and change. So I think we all just need to stay close to whatever happens. And it might be an easy time now to sell vehicles because of short of supply, but I always say that gives a lot of time to start reinventing ourselves in order to be prepared for the future. So I just would like to thank all of the support, our speakers, our founding partner Czech, our advisory board, and of course all of the attendees for asking the questions and also to help us with the poll. Just another view on the program that's upcoming. So on 16th of June, we will have another session, half-day session, optimizing B2B sales. Then in September, an update on the status of artificial intelligence in remarketing. And of course, in real life, the event to be every year, Remarketing Forum on the 16th of November. Thanks a lot for your attendance, your questions, and see you back latest in June. Thank you.